What if I told you that identifying the right stocks to buy and hold could fundamentally alter your financial trajectory for the better? Today, I'm going to break down 3 companies that are absolutely dominating their respective fields, and why I think they deserve a serious look for your long-term portfolio. We'll be exploring a leader in the digital payments revolution, a pioneer in travel accommodation, and a giant in cybersecurity. Each of these has a compelling story and strong fundamentals. So, listen up because this is important. Most importantly, hit that subscribe button and ring the notification bell so you don't miss out on the next important financial investing update from me galore. Alright, let's kick things off with our first pick, a name that pretty much everyone knows, PayPal, ticker symbol PYPL. PayPal isn't just a company, it's practically a verb. Just PayPal me the money. How many times have you heard that? For years, PayPal has been at the forefront of online payment processing, making it easier and safer for millions of people and businesses around the globe to transact online. Their mission has always been about democratizing financial services, and they've certainly made massive strides in that direction. We're talking about hundreds of millions of active accounts worldwide, over 426 million active accounts as of their latest reports. In 2023 alone, they processed something like $1.53 trillion in TPV. So how does PayPal actually make its money? Their core business model revolves around charging fees for transactions. The real bread and butter, though, comes from merchant services. PayPal isn't just resting on its laurels as a simple payment processor. They've strategically expanded their ecosystem through acquisitions and internal development. Think about Venmo, their incredibly popular peer-to-peer payment app, especially among younger demographics. The unstoppable rise of e-commerce is a massive tailwind for PayPal. PayPal has been actively working to expand its global footprint, particularly in emerging markets where digital payment adoption is still in its earlier stages, but growing rapidly. Innovation is also a key part of PayPal's strategy. They've integrated capabilities for users to buy, sell, and hold certain cryptocurrencies directly within their PayPal digital wallets. Now let's be real, the competitive landscape is fierce. You've got players like Block, formerly Square, with its Cash App and merchant services, tech giants like Apple with Apple Pay and Google with Google Pay. Despite the competition, PayPal boasts some significant competitive advantages. First and foremost is its brand recognition and the trust it has built over 2 decades. Looking at their financial health, PayPal has historically demonstrated strong revenue growth and profitability. When we consider PayPal's stock performance, it's had its ups and downs, like many tech and growth stocks, especially in recent years. So, why do I think PayPal is a good hold for 2025 and beyond? It comes down to the long-term trends. Digital payments are not going away, in fact they are becoming more entrenched in our daily lives. What are some potential catalysts for future growth? New product innovations for sure. Of course, no investment is without risks. For PayPal, these include the aforementioned intense competition, which could pressure transaction margins. The management team, currently led by CEO Alex Chriss, who took over in late 2023, is focused on reinvigorating growth and streamlining the business. My personal take is that while PayPal faces challenges, its core strengths are formidable. It's less of a hyper-growth story now and more of a steady, compounding growth story. With a solid market capitalization of $67.93 billion, PayPal has long been a dominant player in the digital payment space. In 2024, the company pulled in a strong $31.8 billion in revenue, translating into a net income of $4.15 billion. That gives it an earnings per share of $4.51, and a relatively modest price-to-earnings ratio of 15.49, which may suggest the stock is undervalued compared to peers. What's even more striking is that its current share price, sitting at $69.85, is nearly 78% below its estimated fair value of $124.30. For value investors, this could signal a potential buying opportunity, assuming confidence in the company's long-term fundamentals remains intact. So, to recap why PayPal is on this list, it's a leader in a massive and growing market, digital payments. It has an incredibly strong brand and network effect, it's profitable, and it's actively innovating. For investors looking for exposure to the fintech revolution with a company that has a proven track record, PayPal is definitely one to keep on your radar for 2025. Next up on our list for 2025 is a company that has fundamentally changed how millions of people think about travel and accommodation. Airbnb, ticker symbol ABNB. Before Airbnb came along, your options for travel stays were largely limited to hotels, motels, or perhaps a traditional bed and breakfast. Airbnb blew that model wide open by creating a platform that connects people who have spare rooms, apartments, or unique properties with travelers looking for authentic, often more affordable and diverse lodging options. Airbnb tapped into something powerful: the experience economy. Modern travelers, especially younger generations, are increasingly seeking more than just a place to sleep. They want unique experiences, local immersion, and a sense of connection to the places they visit. The business model is elegantly simple yet incredibly powerful. Airbnb doesn't own any properties, it acts as a marketplace. The scale of Airbnb today is truly global. We're talking about millions of active listings. I believe it's over 7.7 million active listings worldwide. This network effect is one of Airbnb's key competitive advantages. Now, many wondered how Airbnb would fare during the pandemic, which absolutely decimated the travel industry. They saw a surge in demand for longer-term stays as people embraced remote work and sought work-from-anywhere setups. Looking ahead, several growth drivers support Airbnb's continued expansion. The trend towards flexible work arrangements and digital nomadism is a significant tailwind. Beyond just accommodation, Airbnb has been strategically expanding into experiences. International growth also remains a significant opportunity. However, the path isn't always smooth. The regulatory landscape is a constant challenge for Airbnb. Let's talk financials. Airbnb's financial performance has been impressive, especially its recovery and growth post-pandemic. With a market cap of $79.38 billion, Airbnb generated $11.1 billion in revenue this year. Its net income reached $2.65 billion, giving it earnings per share of $4.04. However, with a price-to-earnings ratio of 31.37, the stock appears to be priced for growth. That means investors are likely betting on continued expansion and profitability, fueled by rising travel demand and an increasingly global customer base. So, why is Airbnb a compelling hold for 2025? Because it's at the forefront of how travel is evolving. Of course, there are risks. Competition from traditional hotel chains, which are increasingly trying to offer more experiential stays, is one. Innovation continues to be a focus for Airbnb. They are constantly rolling out new features and tools for both hosts and guests. From my perspective, Airbnb's moat, built on its strong brand, vast and unique global inventory, and powerful network effects, is substantial. In summary, Airbnb makes this list because it's a dominant player in a massive industry. It has a highly scalable and profitable business model, and it's benefiting from powerful secular trends in how people live, work, and travel. The platform's ability to offer unparalleled choice and unique experiences gives it a lasting competitive edge. For investors with a long-term horizon, Airbnb offers a compelling way to invest in the future of travel. The desire for unique, authentic experiences and flexible travel options is not a fad, it's a fundamental shift in consumer preferences. Airbnb's brand, global network, and innovative platform position it perfectly to capitalize on these enduring trends. They are a category leader with a strong moat, in my opinion. Our third and final stock pick for a 2025 hold is in a sector that's not just growing, it's absolutely critical in today's world: cybersecurity. And the company we're focusing on is CrowdStrike, ticker symbol CRWD. In an age where digital transformation is accelerating across every industry and where our lives are increasingly lived online, the need to protect sensitive data and critical infrastructure from cyber threats has never been more paramount. CrowdStrike is a leader in providing next-generation endpoint security. The threat landscape is constantly evolving, and frankly, it's getting scarier. CrowdStrike's flagship offering is its Falcon platform, which is cloud-native and AI-powered. It uses artificial intelligence and machine learning to detect and prevent threats, even novel zero-day attacks that haven't been seen before. The Falcon platform protects endpoints, think laptops, desktops, servers, and cloud workloads. CrowdStrike's AI-driven behavioral analysis looks for suspicious activities and patterns, allowing it to identify and block malicious actions, even if the specific malware is new. Furthermore, its Threat Graph technology collects and analyzes trillions of security events per week from across its global customer base. CrowdStrike offers a comprehensive suite of modules on its Falcon platform. This leads us to their highly effective land and expand business model. CrowdStrike typically lands a new customer with one or two core modules, like their endpoint protection. Once the customer experiences the effectiveness and ease of use of the Falcon platform, it becomes much easier to upsell them additional modules and services. A critical metric for any software-as-a-service SaaS company like CrowdStrike is annual recurring revenue, or ARR. CrowdStrike has been reporting phenomenal ARR growth, consistently exceeding expectations. The market opportunity for cybersecurity is simply enormous and continues to expand. Now, the cybersecurity space is highly competitive, make no mistake. Despite the competition, CrowdStrike has several key competitive advantages. Looking at CrowdStrike's financial performance, it's been a story of hyper-growth. With a market cap of $113.48 billion, the company reported $3.95 billion in revenue for 2024. However, despite its rapid growth, it posted a slight net loss of $19.27 million, underscoring the heavy investments being made in innovation and market share. While it's not yet profitable, CrowdStrike remains a compelling growth play. especially as demand for digital protection continues to skyrocket in an increasingly connected world. The stock, CRWD, is a classic high-growth name and has performed exceptionally well over the past few years, though it can be volatile. So, why is CrowdStrike a strong hold for 2025? Simply put, cybersecurity is an indispensable and growing need. The threats are relentless and becoming more sophisticated. CrowdStrike's leading technology, strong brand reputation, and successful land and expand model position it to continue capturing a significant share of this expanding market. In an increasingly dangerous digital world, CrowdStrike provides an essential shield, making it a compelling investment for 2025 and beyond for those comfortable with growth-oriented tech stocks. So there you have it. My top 3 stock picks to buy and hold for 2025: PayPal, Airbnb, and CrowdStrike. Each of these companies operates in a distinct high-growth sector and possesses strong fundamentals and competitive advantages that I believe position them for continued success. Remember, investing is a long-term game, and these are companies I see offering significant value over the coming years. Now, if you're enjoying these stock tips and you're ready to level up your investing skills, I've just relaunched my Value Stocks Investing Master Course. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. And one more thing. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Now I'd love to hear from you. Out of these 3 stocks, PayPal, Airbnb, and CrowdStrike, which one are you most bullish on for 2025 and why? Drop your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.